Hello, Craig Stetson here with Capital Edge. Wanted to talk briefly today about a new MRD, Memorandum for Regional Directors, issued by the Defense Contract Audit Agency a few weeks ago. This MRD deals with audit guidance regarding audits of COVID-19 related cost impacts. We expected this to be issued. There's been a lot of correspondence, communication, a lot of guidance issued out of DoD and somewhat out of DCAA regarding, how contractors are supposed to handle and present cost related to COVID-19. So a couple of items of note in this MRD. It's broken down basically into two components. The first being incurred cost proposals for contractors dealing with cost reimbursement type contracts, T&M contracts. They are generally required to submit at the end of the year an incurred cost proposal. So one of the main items that has been very much in the news over the last several months is how to deal with forgiven PPP loans, Paycheck Protection Program. We've received several questions from clients and from contractors. Well, I had this loan, I've applied for forgiveness. What do I do? From an accounting point of view. And that's addressed in the MRD. But basically, this is timely right now because we are seeing now companies, contractors that have actually had their loans forgiven. Recently it was just simply an application, but now some of those applications have been completed and contractors are seeing loans forgiven. So, for contractors that operate on a calendar year, fiscal year, this is relevant because, when it comes time to do the incurred cost proposal here early next year, that loan that was forgiven in this year will need to be dealt with in some form in that incurred costs. So the guidance that came out in the MRD is timely. So regarding the incurred cost proposals, there's basically three or four things to be aware of, in this MRD. The first being credits, not tax credits defined in Section 3610 or other parts of the CARES Act, but credits under FAR Part 31201-5 specifically, which basically grants the government, the right to participate in credits, certain types of credits that relate or attach themselves to costs, previously reimbursed by the government. So the government's position, the DoD's positions, specifically, from day one of the CARES Act initiation here, has been that forgiven PPP loans will be treated as credits. All right, so that really has not been disputed, whether we agree or not that those forgiven loans really are credits is a different subject, but for the purposes of this discussion, let's just assume they are credits. So that is the position. The government will be, the DCA will be looking, when they're doing these incurred cost proposal audits for, where these credits are and how they're flowed through. So that was the first item, of importance, in the MRD is that, in fact, yes, these are credits. So if we just assume that for the moment, then what about timing? I mentioned a few minutes ago, we've gotten a lot of questions as to, well, when do I have to recognize the forgiven loan as some form of a credit for government contracting purposes? And my answer, our answer, Capital Edge, has consistently been really, well, there is no disclosure until you actually receive, or until the loan is forgiven. There's nothing to disclose. The fact that you're applying for forgiveness, there is no entitlement. It may not be actually approved for forgiveness, or the total amount may not be approved, or maybe something less. So there really is nothing from a financial reporting standpoint to disclose or to communicate. And the MRD is consistent in that. It basically says, or specifically says that, until the loan is forgiven, it sits on the balance sheet as a liability, and then upon forgiveness, it's reclassified to the income statement as an element of miscellaneous income. So until that loan is forgiven, there is nothing to do from an accounting point of view. However, as I said, we are seeing now that some of these previous applications for forgiveness have been completed, so it is a real thing now. And for some contractors, it will be something that they have to be concerned about in the near term. And then another question or another item in the MRD is, well, how do I present these credits on my or in my incurred cost proposal? And there really is, there's no one answer there. It really boils down to, you need to follow the money. All right. So I received the loan of X, that's $1 million, let's say. Well, how was that money spent? Was it spent on direct labor? Was it spent on indirect type things like rent, for example? So basically the credit needs to follow what the cost was used for, what the loan was used for, not the cost, what the loan proceeds were used for. And then the credit would simply follow that. So if it was used for indirect labor or other indirect purposes, then there should be a credit that would attach itself to the applicable indirect expense pool, where those costs were initially accumulated and allocated to the government. If they were treated for or used for direct labor purposes, then perhaps there needs to be, credits, direct cost credits to these contracts. And then presentation, the DoD guidance has suggested that, the idle time under Section 3610 needs to be captured separately, needs to, set up a new cost center, a new cost account, whatever the case may be, and presented, as such within the incurred cost proposal, and also in accordance with whatever agreements may have been reached with the contracting officer when the Section 3610 REAs were submitted. So this isn't really PPP loan forgiveness, but it is relevant to the incurred cost proposal, which is, one half basically of the MRD here that we're talking about today. So treatment of PPP loan forgiveness and Section 3610 reimbursements and REAs is the main two main things that the government's going to be looking for when they're doing their incurred cost proposals. And as I mentioned, 3610, just to be relevant here, late last night, Congress formally approved the latest stimulus bill, about $900 billion, the Consolidated Appropriations Act of 2021. So what that does a lot of things actually, but one of the provisions is an extension of Section 3610 now through March 31st, 2021. So this is the second time that Section 3610 has been extended. So through March 2021. So incurred cost proposals, the second piece of the MRD deals with forward pricing. So for contractors that submit forward pricing rate proposals, FPRPs, or have other types of provisional forward pricing type arrangements with the governments or agreements, the DCA is going to be looking at those, looking to see if now, based on, the current situation, current environment, do these agreements, do these proposals need to be adjusted or modified? And they're going to be auditing these proposals through that lens to see if, just simply because of change in circumstances, maybe a change in business volume, next year, or certainly changes in expenses or headcount or other things, caused by COVID-19 that may impact forward pricing rates or other, forward-looking, future-looking type pricing agreements or arrangements with the government. Then the government's going to be looking to audit those, to see if revisions are necessary. So keep that in mind as well. And that's about it. There was one other section in the MRD that was really just a repeat, a summary of all the different DoD guidance and communication that's been issued over the last 9 months, since the beginning of this thing in March or April. So that was included as attachment 1. So kind of timely information. Like I say, the main thing was the PPP loan forgiveness that has been a highly visible item since the beginning of the CARES Act legislation. So that's about it. Just wanted to keep you guys informed. As always, reach out to a trained professional. Check out our website. There'll be a link to the MRD and the reference attachments therein. So certainly any questions, let us know. Thank you very much.